This loan program it's a national loan program, so it's offered across the United States. I believe it's in 22 entire states, which means that holds like the state of Oklahoma. Back probably in 2004, 2003, the state of Oklahoma was only, you could only get this loan within your tribe servicing areas. And thanks to Valerie and all of this, they actually did a lot of hard work and paperwork and got the whole state of Oklahoma opened up. So any tribal member in Oklahoma can apply for the 184 loan. Okay, you get into the qualifying aspect of it. This loan program, like FHA or Fannie Mae, which are conventional type loans, those loans were all submitted through underwriting through an automated system. They input all your information into the computer, and then it submits it to an automated underwriting program, and then it comes back if you're approved or not approved. The 184, it's very unique because it is manually underwritten loans. We do not submit it through any kind of automated underwriting program, which is really good because in Indian country, we tend to have a lot of people that have a lot of unique credit history and a lot of unique situations. So we kind of feel like in Indian country, things are a little different. So it's really good because you actually have a person reviewing this loan, and your situation could be a little different, so you're not automatically just shut down. It's really good to be able to have that interaction with the underwriter. The down payment, if you're going to purchase a 184, if your loan amount or purchase price is under $50,000, the down payment requirement is 1.25% of the purchase price. If your loan amount is over $50,000, the down payment requirement is 2.25% of the purchase price. So try not to get that confused. A lot of people will sometimes think that that's their interest rate. That's not the interest rate because we offer interest rate of what the going market rate is. Just remember that the down payment requirements, $50,000, 1.25, over $50,000, 2.25% is your down payment requirement. The seller, a lot of people, they try to get the sellers to maybe pay some closing costs and prepaids, and the realtors are really good about trying to negotiate the contracts. We do not negotiate sales contracts. That's why we have this group of realtors over here that help do all of that. The sellers can pay up to 6% of your closing costs and prepaids. So, they max out at 6%. So if you can get the seller to pay 6%, then you're doing really great because that's less money you have to come up with for closing costs. 100% of your closing cost and down payment may be gifted by a family member, tribe, housing authority. Not really necessarily even a family member, a significant other. If you're not married, you're not limited to just family. So that's really a great thing about the 184 is because there's lots of other programs that are also available. REI, the CAB. You can utilize all of those programs for help with your down payment and closing costs. I kind of want to touch on a little bit the credit qualifying for 184. We look at your credit when we look at your history, especially the last 12 months. We do not allow you to have any collections. If you do have collections on your credit report, we will ask that they be paid off prior to the loan closing, or they can be paid at closing. If your collections are pretty recent within the past 12 months, or within the 12-month period, we really are going to ask that you document, write a letter of explanation, because ONAP's kind of really gotten a little stricter on the collections being within the past 12 months. They really, if it's medical, or something you can dispute, that would probably be the best thing. But other than that, we would probably say, if you've got, a bunch of collections, 5 or 6, and they're within the past 12 months, you would probably say, let's pay those off, and then let's wait. Maybe we wait, another 12 months to make sure your credit's kind of cleaned up. You cannot, let's say you have an existing home right now, and this is something new that they just came out with on their guidelines. You cannot have a residence right now that you live in or that you may want to rent out and then go purchase a 184. They do have departure guidelines now where they require that if you're going to keep your current home, or let's say a family member maybe, willed you a home, or death of a family, or somebody gave you their home. If you don't owe anything on it, and we pretty much, they don't think that you're just going to leave this house with maybe a mortgage just to get the 184, because what they do is they're not, a lot of people, especially where, have their house maybe in California or even in Oklahoma, they would apply for the 184, get the 184, because if you could qualify with both houses in the past, that was great. They didn't really care. So the underwriting, you could have 2 houses. Well, people were leaving the other house and letting it get foreclosed on and then moving into the 184. So HUD kind of stepped in saying, that's not promoting, responsibility. And so they kind of changed those guidelines. So the guidelines can be, the rule can be broken a little bit, so it's just going to be on a case-by-case basis. So anybody that you have something like that, every situation is different.